I sat on a webinar with Robert Gardner, the chief economist at Nationwide Building Society, which is the third biggest mortgage lender in the whole of the UK. And this is what he thinks will happen to the housing market, the mortgage market, and economy in 2025. If you're new to my channel, hi, I'm Jonathan. I founded SPV Mortgages, which is a specialist mortgage brokerage. About 6 years ago, we've helped hundreds of property investors start and build their property portfolios during that time. And my channel is all about the experiences that I have with them, sharing them with you. So activity in the housing market is really strong, and the stock of properties coming onto the market to be sold is increasing, which is great news. But what's interesting is when we dive into the numbers in regards to first-time buyers. And what Robert mentioned is that first-time buyer take-home pay in relation to mortgage payments is at an all-time high of around 50%. Typically, it hovers between 30 and 40, which means that it's just so difficult for first-time buyers to get onto the property market currently. Then in regards to deposits, Robert said that 10% deposits are incredibly difficult to obtain by first-time buyers. Looking at the investment side of the market, tenant demand is exceptionally strong. And the reason being is there are fewer new landlords coming into the space, and old landlords aren't expanding their portfolios as quickly as they used to. Now, according to the Royal Institute of Chartered Surveyors, they've indicated that rental demand will remain strong this year, 2025, moving into following years as a result of that new trend. So overall, the property market is looking very good, with the economy in good shape as well. What Robert mentioned was that interest rates will continue to fall throughout 2025 and beyond, and that will obviously improve conditions as well. All in all, housing market looks to be in a really good shape. Now, what I found particularly interesting about the comments around the housing market was the fact that property investors are willing to pay up to 10.9% above asking price for an A or B rated efficient property. Only 3.7% for Cs. What's interesting about that is property investors are willing to pay a premium for energy efficient properties, as they should be, because there's new regulations coming into place shortly. What's interesting about why property investors are purchasing energy efficient properties and they're willing to pay that premium is because they can actually charge a premium on the rents. So according to Nationwide data, if a property investor purchases a property which has an A or B rating, they can charge up to 7% more on the rental income per year. Mortgage pricing is influenced by swap rates. Now, swap rates are the rates that banks and financial institutions lend to each other. Now, they are historically very volatile. They're not as stable as mortgage rates that you and I see on a daily basis, and they're certainly not as stable as the Bank of England base rate. But what's interesting about swap rates is that they are forward pricing. So what they do is they take into account, or the markets take into account, what future interest rates may look like and then price accordingly. That pricing is then passed on to the likes of you and I for our mortgages. Now, according to Nationwide, the economy is strong, inflation's dropping, unemployment's low, and consumer spending is below average. In regards to the Bank of England, what they think, based on those factors, is that the Bank of England will drop the base rate by 100 basis points. So that's massive 1% in 2025. What does that mean for mortgage rates? Well, as I mentioned, mortgage rates are linked to swap rates. Swap rates are forward pricing. So perhaps a lot of that has already been priced into the markets already, perhaps not. We'll see how that pans out. But I think for anyone looking to take out a mortgage, or particularly to invest in a property, right now, mortgage rates are poised to drop over 2025. Regarding the economy, Robert mentioned that although it's growing slowly, it is still growing. And the recent budget will have a stimulative effect on that. Household spending will start to increase, and that's really important because around 2/3 of our economy is made up of household spending. Right now, it's quite subdued, but it is slated to move forward, and obviously the budget will kickstart spending moving forward, which is great. But when asked about will that create any inflationary pressures that might lead to a reduction in the number of base rate cuts, what Mr. Gardner said was that they don't actually believe that to be the case. They believe that 4 base rate movements will occur this year. They feel that although consumer spending will start to increase over 2025, it won't cause any inflationary pressures for the Bank of England not to drop the rates, which is really positive. Debt levels are at their lowest level since 2020, but consumer confidence seems to be a little bit subdued, and it's probably because of all the uncertainty which is knocking around currently. Given that, Nationwide predicts that still the Bank of England base rate will drop 0.25% over 4 meetings over 2025. And the economy still grew at between sort of 1 and 1.5%. So all in all, the comments from Nationwide, from Mr. Gardner, were that the economy is strong, it will continue to grow moving forwards. We seem to be coming out of the storm and everything looks quite positive based upon what he sees his end. So if you're thinking about investing in property in 2025, but you're not too sure where to start, watch this. And if you're already invested in the property market and you're looking to do something completely different, then I'd watch this.